van jou mis af? Okay, is af. Sit hier so by die kant.
Just maybe on a lighter note, in Capitec, and I was in the office when the news broke, and I had a jean on with a short sleeve shirt, not realizing I'll face the media today, and I had to phone my wife quickly to say, bring me clothes, and she forgot to bring me a belt, so I'm without a belt. That's just on a lighter note.
When I told Harry about the Viceroy report, he thought we were going for a tasting.
Good afternoon. This is Gerry Fourie, the CEO, and next to him is Andre Plessis, the CFO, Capitec Bank. What we're going to do at this moment is Gerry will give a statement, a short statement, and we received questions during the day from different media, and we're going to address those questions. So I want you to hold off and hold on until we have addressed all those questions. And I have to stress that we have recordings that is scheduled in this building, and we have to leave at a specific time. So you have to excuse us. We can come back later than after that, but at this stage we have a predetermined time that we can be here.
How's it yours?
Yeah. Very.
Okay, I'll start off. We just had our session with investors, sharing with them our thoughts on the Viceroy report. I'll start off by emphasizing one of our fundamentals is to be transparent, transparent with everyone, and very importantly is to look at simplicity. So when we talk to anyone, that people can understand it. I always say if you can't explain something in a very simplistic manner, you don't know the subject. I think what is important for us is we always bring out our results 1 month after year end. In this case, we're going into a close period on Wednesday, and we bringing out our results on 27th of March. So within a month, we bring out our results, and I think we've been complimented in the past on the transparency and the openness of that. I think what is also important for us, we're always open to communicate to anyone, to the media, to asset managers, to investors. Myself and Andre spend a tremendous amount of time working with people, addressing people. I personally spend about 7 to 8 weeks a year talking to analysts, addressing their questions, and if we can't answer, we will address it immediately. As you all know, and Viceroy has admitted this morning on Bloomberg, they haven't been in contact with ourselves. They know our office is open, so they brought out a one-sided report, which we believe a lot of things are factually completely incorrect. We've also got a problem with the fact that they short the stock and then bring out a statement, so they've got a profit motive behind it. I think they can do much more to get the facts from both sides. We have given instruction to our attorneys to take it up with the FSP because we're not happy that the way they actually go about it. I think what is for us is important, it's not only affecting Capitec, it's affecting the other banks, it's also affecting the trust in South Africa. I think currently where we are, we need to focus on growth and growing the economy, and if you get a report like this, it just puts people in a negative space. I think we had extremely positive news in the last couple of months, and it's important to add that. For us, it's very important. It also puts pressure on the regulators. As you also seen, the Reserve Bank, I was in touch with them about 10 o'clock this morning, informing them of the report, and they, out of their own will, brought out a statement and saying they support Capitec and we are going concern, and there's no problems with Capitec. That news is already out. I just want to also highlight that bringing out and linking everything to Steinhoff, the so-called investment in Fulcrum. If you look at the book of Capfin, that's about a 1.5, 1.8 billion book. The real problems with Steinhoff goes about the auditors don't want to sign off the statements and so-called problems on the accounting side. It's got nothing to do with unsecured lending. I just want to emphasize as well for us what is important in Capitec is that we believe we've built a bank on very strong fundamentals. Our people is very important. We've got a very strong focus on the unsecured credit markets. That's where we actually saw opportunity. But in the last couple of years, we've established a very strong client base, a very strong transactional base. Over 40% of our income is now coming out of transactional side. There were some reports that came out a year ago where it shown that we've actually saved clients in the banking sector in South Africa 19 billion rand, where Capitec has forced to change competitors in the market. And then on the retail side, we've done extremely well. We've said in September when we brought out our results, we will pull back in certain areas. We see stress in certain areas on the higher risk clients, lower income clients, and we've communicated it. Given our transactional base, it gives us that opportunity to do it. If I look at the report, we've brought out a full report or a sense statement given the questions that have been asked. You've got access to it. I think I just want to highlight certain things that maybe has not been mentioned in the sense. The first thing is we got our financial people this morning to analyze the report, to go through the report and to see if we can balance it. And we're struggling to understand, to reconcile the numbers that they've done. On the repayments of loans in a particular year, we've published a figure of 18 billion. They are at 16 billion. If we look at our arrears, we're talking 5 billion, they're talking 3 billion. We don't understand how they're getting to those numbers, and we're still analysing and try to see if we can get to a better understanding. And we'll keep you up to date. What we believe there's a lot of factual incorrectness in these numbers. They've done a comparison of, for example, on arrears, where they're looking and comparing us on arrears. Why is our arrears so low? It's a very straightforward answer. We write off a loan if it's in arrears after 90 days. The other people don't write it off. They keep it on their books for 180 days and longer. So in our case, if a client is in arrears, maybe let's say he's got 2 or 3 loans, the moment that client is in arrears with 1 loan, we provide on all loans, and like I said, we write off at 90 days. So we haven't got non-performing loans, so that makes it extremely difficult, or you can't compare our arrears with other arrears. I think if you look at our risk appetite, the way we analyze clients, we're very strict on affordability, on behavioral model, where we actually look at the client's behavior, external, internal, as well as banking, as well as we look at where he's employed. So we make differentiations between people that's employed in a high risk area. So it's a completely different, or we treat credit completely different. I think if you look at a comparison between ourselves and African Bank, when the demise of African Bank happened, we made it clear that we are different before, and I think everyone understood it afterwards that there's a difference. If you look at, we've got a very strong transactional base, we've got retail funding, and then our credit risk appetite is completely different. If you just look at insurance, insurance was always part of our fees, and with the new regulations that came in last year, the 4.50, we're doing it on a declining balance. For example, if a client had 100,000 rand and he's repaying that amount and it drops to, let's say, 20,000, we're only charging the credit life on that 20,000, where other organizations is on that initial capital, overstating it and charging him an extra fee. So we're very strong on the compliance side and on the regulatory side. I think what is also important is if you look at the cases that they refer to, they got that from court papers. I think it's conveniently, but they haven't published our opposing papers. Those opposing papers are available, so it's nice if you've got a one-sided attack. If you look at the 2 or 3 clients they referred to, it's interesting. Tobiani, that particular client was never in arrears with ourselves. He always repaid us. He repaid all his other credit providers. He always had extra cash available. And when he was retrenched, we covered his loan fully through our retrenchment cover. And exactly the same with other clients. So we're quite comfortable with affordability, and we're quite comfortable with what's happened. I think maybe the other area that I can emphasize is on the people side. We extremely focused on our people. Believe it's important that our people are inspired. They understand where we're going, why we do certain things. It's interesting that they've just asked people that has left us or people that was dismissed. Now you will get a one-sided story if you only go and ask certain people. I don't know why they didn't have interviews with ourselves or certain people that's currently employed. It's interesting for me how they, branch managers is reflecting that our branch managers on average is getting a 13,000 Rand salary that factually the average is 22,000 Rand. So there's a lot of these factual information that is actually incorrect. I think if I look at on the deposit insurance side, they're talking about a 2.3 billion exposure. Proposed regulations came out in May. It's not been finalized. We're still working with the industry. We've looked at it, and the exposure is much less. Again, it's just showing there's a different approach.
Terry, can you maybe speak a little bit about how people, is their money safe at Capitec Bank?
Well, if you look at, I think trust is a very important aspect for retail deposits to actually deposit their money with ourselves. We've always said we want to build a bank that's 100 years old plus. We've always been transparent with our people. If there's bad news, we communicate that. We say that. I believe the biggest compliment we can get is the statement from the Reserve Bank. They get monthly our figures. They analyze it. They've sit every 6 months with us going through in detail. So I think that gives you a clear indication that there's no concerns.
We will have to wrap up and then go to other scheduled appointments, and then we can maybe come back a little bit later, but we unfortunately have certain appointments that we have to stick to at this moment. Thank you very much.
Evaluated our deposits during the day, and what was business as normal. We just had a lot of people inquiring, asking questions, and I think the statement, we spend quite a lot of time communicating to our branch personnel, informing them what is happening. The reply that we gave to Bloomberg this morning, we gave to our staff, we gave them the News 24 article by the Reserve Bank, and that's quieted down quite a lot. We've also sent SMSs and communication to our depositors so that they're fully aware what's happening. So far we're quite relaxed.
So then, you said it's the report is filled with inaccuracies. Just what do you think the motive behind this report that this could be?
I don't want to speculate on the motive. I think I've said that for me, I've got a concern if a report comes out and it's there's a lot of inaccuracies and they're not prepared to talk to us. And when you short a stock and then bring out a report, there's for sure a profit motive. But I don't know the real motives. And like I said, we've always been open to anyone if they've got questions. So they could have got hold of us and then brought out the report.
Capitec has a track record of 17 years of total transparency. So this is our approach to any crisis.
So,
Yes.
so I'm Sasha Counting from Anyway.
Hello,
So
Sasha.
I'm putting the Viceroy report aside because I think it's quite sensational. But there are other fund managers that have approached you over the last 2 to 3 weeks with very specific concerns. And the one that comes to mind is Benguela. Have you responded to them personally and in detail on their concerns?
Benguela wrote to me and they gave us a deadline of the 5th of February. So we're well within the deadline of that. It's actually on my table at the moment, just finalizing it. But again, there is no concerns from our point of view. And I actually said it to the CEO as well.
Andre phoned
He
the
communicated with me afterwards, saying we're very glad that we have an open stance on that, and we'll communicate with him. I actually invited him to come and see me, or if he cannot come and see me, I will fly up to Johannesburg to have a detailed discussion with him.
Andre was actually planning to go up on Friday, and then the Viceroy report came out this morning.
Besides the FSB, are you considering any other sort of action, whether it be criminal, civil, and or regulatory against Viceroy?
The focus now is to get the facts and figures out, and to handle the clients and handle the media. Us. We've just taken the FSB approach, of course, and we will consider our options going forward.
Is there time for another question?
You can ask another question.
So the concern, a large part of the concern from Benguela seems to be around the rescheduling of loans. And they seem to be suggesting that a very large part of your loan book is now rescheduled loans. So my first question is, do you charge a fee when you reschedule loans?
No, we don't.
Because it looks like you do.
Well, we actually refuted that comment in the first line of the letter to them. Find it a bit surprising that you have all the details of the Benguela letter, but maybe if I respond to them, just ask them for the answers.
And the rescheduling of loans, is that?
Sharing of loans,
do you
let's.
address that?
No,
Is
but
there something like that?
if you look at, let's use a simple example. If a person is on maternity, what do? That person hasn't got an income for a 4-month period. So what do? You sit with that person, he's got, let's say, UIF, he gets 40% income, he loses 60%. So, or she. So what do you do in that case? You've got 2 approaches. You can say, sorry, you need to repay, or you say to that client, okay, right, you've got the circumstances for a 4-month period, how are we going to overcome that? And I can use numerous examples like that. We've got very strict rules on rescheduling. We disclose that in our financial results. In September 2016, we actually, on the asset managers, Andre spent a half an hour on how do we reschedule, how do we provide, what do we do on it. So it's not a matter if you walk in and you get rescheduling. A big portion of our clients are declined on rescheduling because they don't qualify. But it's part of, if you provide credit, you need to look at the circumstances of the client, and you need to act because you need to build a long-term relationship with that client.
Okay. Any last question?
Can I just respond one final thing on that? Even if we reschedule the loan, we don't release the provision on the loan. We actually keep it there for a period of 12 months until we're very sure that the client has actually rehabilitated. And there's clear evidence from the statistics that in many cases, in line with our rescheduling policy, it is the right medicine for both ourselves as well as the client.
Yeah. Last question.
Thanks. One of the key claims I believe that Viceroy made is when they say, in their view, the bank may have to write off a total of 11 billion in what they say are bad loans. Do you want to respond to that?
got about 3 CAs today to look at that 11 billion number, and we can't reconcile it. So Andre also spent some time on it, and we can't get to that particular answer. That's the difficult part. Somebody does a sum, you don't understand, and they don't disclose 100% how they do the sum. So we spend 3 to 4 hours today on it. We'll spend more time. There's people now working on it, trying to understand it. But there's numerous things that we've picked up that we disagree completely.
Again, re-emphasizing, we write off all outstanding repayments over after a 3-month period. So our arrears coverage ratio, as it is already over 220%. So where it gets to 11 million, it's very difficult to calculate.
Okay, that's a wrap.